Hello, everyone, and thanks for joining me in Fundamental Signals. I believe HIMS have more room to grow, and I'm going to show you why. First, let's take a look at revenue and the revenue momentum oscillator. So, as you know in this channel, this revenue momentum oscillator basically shows if the price is lagging behind the revenue growth. Now, in this chart, we can clearly see that after this rally from October 23 till April 2025, right, we are in a downturn, right? We've been in a downturn, and recently the stock price start going up, and we can see that this momentum oscillator is going back up, meaning it's giving us this undervaluation signal, and that's based on the increase in revenue but decrease in price. So there's a divergence here, and although the price has been catching up, but it's not there yet. So historically, HIMS doesn't have a long history. Started up from October 2020, but we can see from April 2021 till October 2022, we have had this green signal, right? And the price has been going down during that time. So again, having a green signal doesn't mean it's going to go up if you buy it right now. It just means there's a divergence, right? So the divergence can continue for some time. It could be a year, it could be 6 months, it could be 2 years. We don't know. Nobody knows. But there's a divergence. And then starts had a rally from $3 all the way up to $10. That's where this oscillator went down, because now the price is catching up and actually growing more than revenue, right? And then that's where this starts going back down till October 2023, and then we get this green signal again for a while, and the stock rallied from $6 all the way up to, I think it is around like $41, $50. And then since then, we again been in a downturn here, right? And now again, we're starting going up, right? So this oscillator, again, we don't have much of a data, right? But this oscillator kind of can give us an idea of what's happening in the stock. Now, another good thing about this is we still have revenue that is going up. It's not stagnating, right? We can see that revenue is going up. The estimated revenue is going to go up. Next thing I want to show you is P to S ratio, price to sales ratio. And since, the stock has been there from October 2019 actually, but at the beginning you cannot really rely on the data, because this is basically price to sales ratio average 2 years out, and then compare the stock price with the average of 2 years, right? So we cannot really rely on the data at the beginning, but we can see from April 2021 we start getting some good signals here, and in May 2022, where the stock start dipping into $3, this indicator, which is price to P2S ratio, went down to -1, -1.5, and that's where basically the price bottom and starts going up, back up again. Again, it went down. Below -1, I would say, is the zone where the price usually bottoms, and then again going back up. Again, going down here to -1.4, and you see this -1.2 started in August 2023, and it stayed down there till November 2023. So August, November, December, August, September, October, November. So 4 months before it actually pick up again. So if you start buying in here, you would be with the stock from $6 all the way down to 5. Actually, not $6, sorry. here it was $8 all the way down to $6. So it's gonna be brutal, but the reward after that was a lot. Now recently we have had this dip, right? We have had this dip here, and this indicator was at -2 basically, and then since then we have been going up. So seems like the bottom is in, and we might see higher prices for HIMS. And last thing I want to show you is this metric, this indicator called composite risk. So what is this composite risk? Is basically is a risk score between 0 to 100, which combine valuation, momentum, mean reversion, drawdown, and volatility, right? So we have this, and then we can see this is giving very good signals to where we're overvalued and where we are undervalued. So we can see this below this middle line, which is 50%. It's time to buy. It's time to buy. I'm just going to summarize it to that. And then when it goes up above 50, it's time to, scale down, maybe sell, take some profit. And here again, going up. Now we've been in this green region, which is very down here. It's 25, which is basically, it shows stock is low risk, meaning there is a high chance the stock gonna go up after that. So low risk, you can buy in and expect that chances are that it's going up, right? We can see over time, if you would DCA into risk below 50 and exit above 60, it happened 5 times only in the price in the history of the stock. But then your reward was 63%, an average wait of 249 days, right? So right now that metric is sitting at 39, right? So it's low. You can expect this metric to go up. By this metric going up, meaning the price is going up. So overall, I can see HIMS going up from here. But how much are we gonna go up? I really don't know. Nobody knows. It's just based on this indicator and based on the revenue that we see that is growing for the next year, we can expect some positive price action here. Okay, right? I hope you enjoyed this content. Please make sure to subscribe and give me a thumbs up, and I'll see you next time.